All right, taking a look at gold on Friday. Gold continued to consolidate around the 20 moving average. But before we go further, a quick word from our sponsor. This video is brought to you by XNES, the world's largest retail broker offering ultra-fast execution with no overnight fees. Find the link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for gold. So, we've got a what I believe is going to be a continuation of the correction because we got a. Let me just go back to the weekly real quick because this is important. The weekly, the larger pattern, the more significant pattern, the larger pattern that influences the shorter patterns, and you could see, well, you can't maybe see it all, but we had a reversal week last week that dropped to a 3-week low and closed in the lower third of the week's trading range. So this is a reversal week that dropped through support of the trend line. And going back to the daily chart, the purple 20 moving average before finding support at 2008.33, creating a swing low. Rally back up to test previous previous support as resistance. That was the case here on Monday with the purple 20 moving average, but then it was reclaimed and it was not showing resistance. But resistance was seen at the trend line. So whether that is enough to lead to the second leg down or not remains to be seen. You could see upward pressure has remained this week as consolidation is pushing up against that resistance at the 78.6% level. So a decisive rally above this high. Well, let me step back. So that leaves us with an inside week. This week's high and low will be key price levels to define what might happen next. The high, of course, today's high is slightly higher, 2009.30. A decisive breakout above there could end up challenging the trend high at 2009.56 rather than leading to a second drop down. However, the alternative, and I think the more likely scenario, is that if we drop below this 4-day low at 2008.82, then this swing low here is likely to be challenged, and possibly the next lower target zone around 2008.13 to 2008.10 is hit, and that consists of the blue 38.2% retracement, Fibonacci retracement, and the completion of this ABCD pattern at 2008.10, and this just shows symmetry between the two declines. And once that happens, a potential pivot level is identified, which would be support in this case. And then also we have the orange 50 moving average that is still rising, and it's certainly possible that by the time price is approaching this potential support zone, the 50 moving average is also within the same price area. That would make it even more significant and increase the chance that support is seen there and the significance of a bullish reversal off that price level. So that's what we're watching. Other than that, have a great weekend.